Hello, hello. Rock and come in. Money Classroom is back. Season 3. Welcome, money people. Rock and come in to the Money Classroom. Just opening up our live session. So, gearing that up. We're streaming live to Instagram as well. So, that's exciting and new. That's a one. It's good to see. So just setting that up on the tech end, make sure everything is connected, everything is everything and it's working. Just as you come in, just drop a connect in the chat so I know that you see me and know that you can hear me. So just connect in the chat, connect, just so I know. So I know you guys are there. See my IG folks coming. Nice, are rolling. Nice. uh, YouTube folks rolling in as well. Love it. Dual streaming them, said dual streaming. So we're back for season 3, Money Classroom, bigger and better. For season 3, I wanted a completely different spin. I say, you know what? Time for the real talk about how to make more money. Let's talk about that because that is where I want to take the education to more of a practical, hands-on level. So that's what we're here. That's what we're gonna talk about. That's what we do. So as you guys know, Money Classroom is where you come to learn about money, how it works, and how to make more of it. So regardless of your age or your stage or how much money you make your wage, regardless of that, Money Classroom will teach you how to make more money. So that's what we're here about. That's what we're going into. So We're gonna jump in. Starting off talking about various things, right? So this overall episode is riding the highs because basically everything is at a high. A lot of things are at highs right now. We have Nvidia stock price in the US, that's at a high. GameStop stock price take off again, that's at a high. Tourism in Jamaica is at a high, and a lot of investments generally are at a high. And most recently today, I saw Bank of Canada make an important announcement, which we're going to talk about, that is going to push certain assets in Canada to all-time highs again. So everything out there, beer highs, we're riding the high wave. So how are we gonna actually make money from this? That's what we're gonna talk about as well. But of course, I'm gonna run my disclaimer. This is financial education that we're talking about, not advice. My name is Keisha the teacher. That's what you guys call me. I'm not your advisor. So I'm going to be teaching you, and you can take from it what you will. Talk to your advisor to decide, what's the best move for me. That's how it goes. So I'm gonna jump in. Let's just jump in to talk about Bank of Canada and what's going on there. So today, Bank of Canada, the Central Bank of Canada, they made an important announcement. Interest rate are cut. So they're the first to do this. Big things, really big things. They're the first central bank to cut rates. And it's the first time the Bank of Canada is cutting rates since 2020 in the pandemic. So think about it. COVID-19 came around March 2020. All central banks did the same move. They said, all right, it's time to cut it. They cut interest rates to zero because there was a lot of panic and fear at the time about what would happen to the global economy. But coming out of COVID, we had a lot of interest rate increases all across the world. The central banks rapidly increased interest rates because inflation was becoming a problem. The prices of everything started going up very, very fast. And so the central banks, they come in and they say, look here, we need to slow this thing down. Prices can't keep going up that much. And so they decided to start hiking interest rates, and they hike aggressively. So that's been happening from 2021 into 2022. So it's nice now to see that 2023 roll around and Bank of Canada, one of the largest central banks in the world, is saying, hey, we cut interest rates by 0.25%, which is 25 basis points. Now, what does that mean overall for my Canadians in there, right? My oh Canada, the Canadians. What does that mean? Well, definitely your mortgage for those who have variable rate mortgages, the rate's going to come down. That means your monthly payments would also come down. Little breathing room for you, right? The other big spill off of lower interest rates in Canada is gonna be house prices, real estate prices, because with lower interest rates, home ownership become a weeny bit more affordable, more possible. No, here's the thing. House prices in Canada are already very high. They're high, super high. They started to come down a little bit, and there wasn't a lot of activity in the market for most of last year. But now with this interest rate cut, I know it's gone. It's on fire. Real estate prices are going to pick up a lot in Canada and very fast. So worse if the Bank of Canada come again with another cut at the next meeting next month. If they come again with that, straight real estate prices are gonna go take off in Canada for sure. That's gonna happen. Now, for persons who own a home in Canada, that's great because it means that, well, money out there for make. Your real estate, your asset, the value is going up, wealth is being created. That's good. But as you think about getting into the markets, getting into the real estate markets right now, it may be harder to buy a house because the price gone up, right? Especially for new immigrants just going into Canada, it's gonna be hard. It's gonna be hard because the price is higher and affordability is higher in Canada. You have to put a lot of money down to buy a house. It's not your typical 5%. It's 5% of a million. It's a lot. It's a lot. So you want to think about that for the Canadians out there. Think about, all right, Bank of Canada cut rates. Real estate prices are going to go up because of it. What should I be doing then to position myself to be able to buy my first house? If you own a house already, you need to be thinking about, well, the value of my real estate will go up. How can I make some money off of this? What are some of the things I can start doing? So Orville is here. Hello, Orville. Big up yourself. Good evening. Welcome back. Season 3. You like it? You like it? We're back. Yeah, exciting times, right? So let's talk about another big news. That was Bank of Canada. We'll just wrap on there. But another big news, Nvidia. Nvidia is another thing that's at all-time high. We're talking about tonight riding the highs. Everything out there at a high. So Canada house price gone beer high. Another thing at a high is Nvidia. So I have a clip I want to share with you guys about Nvidia's stock price, especially the fact that they're doing this 10-for-1 stock split. I want to go through that and talk about really and truly what I mean. What does the Nvidia stock split mean for us as investors? So run the clip.
Big earnings report that the company just wowed Wall Street with. Massive beat in its core data center business, revenue nearly tripling from a year ago. But perhaps one of the biggest pieces of news out of the report, a 10-for-1 stock split. Nvidia shareholders will get 10 shares for every 1 share of the company they currently own. Now that goes into effect June 10th for people who own shares as of June 7th.
Yeah, so all right, 10-for-1 stock split with Nvidia. What that means? Typically, when you see a stock split, new shares are being created, but the overall value of the company does not change. So think about it like a pizza. You have the pizza and you have the slices. The stock split is just slicing up the pizza. It's still a pizza, still a pepperoni, still a Hawaiian, my favorite. It's still that. But the fact that the pizza is sliced up, it becomes a little more affordable when you're selling now a slice. So that's really what's going to happen to Nvidia. Existing shareholders will get 9 additional shares for each share they currently have. So if you have 1 share, you're now going to have 10. If you had 10 shares of Nvidia, you're now gonna have 100. But there's no overall change in the market cap of the company. The market cap is still the same. So the value of the investment that you have is still gonna be the same. You will just have more shares, but the current price is gonna be divided by 10. So right now, Nvidia is around 1,100 US. And we can bring up the chart on where Nvidia is right now. That's Nvidia, right? Over the last year, that stock is up 141%. Bring it up again. It's up 141% in a year. It's at 1,100. So after the stock split, it's gonna be about 116 US a share. But you will have more shares. The value overall of the company don't change. Remember that. But when you look at Nvidia's stock price, you see this big jump up, a lot of money. We've had a lot of persons inside Profit Jumpstarter Academy. That's our wealth creation platform, our financial enablement platform, where we have students inside. A lot of them do investments, like they own Nvidia shares, and them are big. They've made a lot of money this year because they've owned Nvidia from last year and they've been benefiting from that 141% increase in the price. Now, Arville is saying, why everybody use the analogy of the pizza? It's simple. I mean, how I think about the person, I think of it like a patty. And you broke up the patty into pieces, it's still a patty. Or like when I was younger, my mother used to send me to go buy a big Gila oil because we couldn't afford the whole bottle of oil. So she used to say, go buy a big Gila oil. It's cheaper, but it's still pouring from the same bottle. All the shopkeeper do, they would just divide out the price and sell you the big Gila oil. But the value of it doesn't change. But it's the psyche. The thing with stock splits, the psyche is what is important because investors see stock splits with lower price and a lot of new interest comes about the company. That's the real deal behind it. So yes, the stock split occurred. We've had, Tesla do stock splits, Chipotle did a stock split as well, and Apple did a stock split. But it happens, but it creates a lot of interest in the stock. Investors now come in and say, all right, let's start buying up some shares. Let's buy up because the price. They feel, it's more affordable. Nothing really changed, but the psyches of it for investors is that, if Nvidia is at $100 and something dollars, or if it even fall below $100, that's nice. I want some Nvidia shares, especially a company like Nvidia that is doing so well. So a lot of interest is going to come back into the stock. People are going to start trading it more. And we as investors, the money people, we have to ask ourselves, how can I make money from this? The stock split won't happen. Keisha, the teacher, tell me, say, a lot of interest will come back. What we need to do? You need to think about, all right, do I need to start owning shares? Do I need to buy the dip? What do I need to do with Nvidia? My thoughts on it, Nvidia is a very strong company. It's one of those great companies from an investment perspective. It's very, very strong. Every single year so far, this company has set revenue expectations, sale expectations, and they beat it. They lick it out the park. And they keep setting higher and higher expectations, and they keep beating it. On top of that, their CEO came out and said, look here, going forward, we're releasing a new AI chip every year. We're in this to win this. That's what the man basically is saying. And when you think about that, you say, all right, this company definitely is going to do well because they continue to grow their top line, their sales. The business model is very, very strong because every smart device needs chips inside of it. Every single smart device needs that. And that's the business Nvidia is in. They make the chips that go in all the smart devices. Smart devices not going away. In fact, I would say more smart devices are coming out. And definitely with AI, you need more computing power in the chips. And AI are key. So I don't see a world in which we are not going to be using these chips. Nvidia will continue, therefore, to keep going higher and higher. Your thoughts then as an investor is, what am I going to do? How am I going to make some money off of this? Because that's what we're here to talk about. How do I make more money? I see these things happening around me, but I can't sit down and just make them pass. I have to do more. How do I make more? And it may mean buying Nvidia. It may mean, let me start building up some shares. Come June 7, the stock price is gonna be divided by 10. It's gonna be around $100 to $110 based on where Nvidia is. What are you going to do about that? You going to sit down and watch it and make it pass you? Or are you going to think of a way to make some money off of this trade? Well, really up to you. Really and truly up to you. So that's Nvidia. Let's talk about my next thing I saw that's really big news. Because we're going through different news items, different trends, different things that I see as money-making opportunities. The next thing is GameStop. GameStop out there. I don't know how many of you guys know about GameStop. So I have a little clip I want to share about what's happening with GameStop share price.
So no fundamental news really driving this when the latest GameStop rally was led and sparked by an online post from the account of Keith Gill. You might remember that name. He also goes by Roaring Kitty and famously led this army of retail traders into the GameStop short squeeze a few years ago. He hadn't really posted since then, but his Roaring Kitty account had been back at it in recent weeks, tweeting and ginning up excitement around GameStop. You can see it reflected in the share price, despite never mentioning that stock by name. Until now, there hadn't been any action from his account on Reddit. That changed over the weekend with a screenshot of what appeared to be a $116 million position in GameStop. We couldn't verify that screenshot, but it did show 120,000 call options, strike price of $20, and it was bought. Those shares were bought around $5 a stock this morning, trading above $29.
Yeah, so GameStop out there. Now, the thing is, I don't know many of you guys watch the show called Dumb Money. I saw it recently, and it's basically telling you about the GameStop story. So, Roaring Kitty, Roaring Kitty is the guy behind this whole GameStop rally. His name is Keith Gill. That's his real government name. And he calls himself, a very avid investor. He runs a YouTube channel. He's on Reddit, which is a social media platform. And he really and truly believes in GameStop. The man is set on GameStop. I don't know if you know him, drop it in the chat if you've seen or heard about Roaring Kitty before. Now, with Roaring Kitty, he back in a few years ago, back in the midst of the pandemic, I can bring up the price chart for GameStop so I can show you guys what happened there. But with it, back in 2021, as you see on the chart here, the price of GameStop went from less than $10 share, it was $1 something, went all the way up. Run it again and we loop it so it stay on. So it was less than $10 a share, went up to $80. Imagine that, 80 times your money. Over the last 5 years, GameStop is up 2,000%. Remember we talked about Nvidia, which was up 141%. GameStop is up 2,000%. A lot of people have made a bag of money off of GameStop. And how they did it, some people just buy the shares and they hold it, hold on for their life. They just hold it and they make the money. But others did call options, meaning they bought these options where for every option you own, you control 100 shares. So they make 80 times on 100 shares. They make even more money. So the thing with GameStop, the business model not very strong. And nowadays, with cloud computing and everybody doing games online, the big investors, the institutional investors, they think companies like GameStop are gonna go out of business. You can bring it down now. So they think that GameStop is gonna go out of business. So what they did, they started creating these short positions. They started selling down the shares. Now, Roaring Kitty say, I really believe in this company. And he did a lot of videos about his thoughts on GameStop and why he thinks this is like the next big thing. People start listening to him and they started buying up the shares. The average little person. And what Keith Gill, Roaring Kitty, says, look here, let's come together and do these positions. I believe in it. May I put my all in it? May I go hard? And investors follow him, people follow him. And Wall Street became very, I guess, nervous. Let me use that word, because they were shorting the stock. So the more the price go up, the more money they were losing. So the whole thing became a battle of, Wall Street versus the regular guy. And the regular guy said, look here, we are go hard with the Wall Street, make too much money off of we at our time now. And a lot of people made a lot of money off of GameStop. No, it kind of got quiet because the SEC came after Roaring Kitty and said, look here, you're doing market manipulation. They carry him go court. He had to, go through a whole hearing and everything. And he just got quiet after that. Him no tweet, him no none. But he came back recently and showed his portfolio. Let me show you guys what he has in his portfolio. The man, Roaring Kitty, has $210 million in GameStop. 210. That circle you're seeing circling up 210 million with an M dollars in GameStop. So he just showed that portfolio on June 2nd and said, all right, 210 million. So of course, when people see that, they say, wait, Roaring Kitty back. And he has a very large position in GameStop. That push up the price of GameStop. So if we bring back the GameStop chart, I can show you what happened there. Bring up the chart, make we see. So that last blue circle is circling. That is now GameStop recently. The price went up again, 20% in one day, because Roaring Kitty came out. Keep saying, Roaring Kitty came out and said, look here, we have 210 million in this thing. I still believe in it. And, him revived the GameStop tribe. So investors start buying it up again and the price jump up. No, the thing with GameStop is one of those meme trades, as you call it, right? You can bring it down. It's one of those meme trades. So does it have any long-term value? No, not really. It doesn't. But it's a good, I wouldn't even say good. It's a short-term strategy. Some traders look at it and say, well, all right, we know, say, Roaring Kitty will influence people to buy GameStop shares. So let me jump in and do some call. Let me do some call options, make some quick money off of it. No, people may be watching and I say, can I do that? No, Keisha. No, the time pass. No, you can't do it. The time pass. But I just explained to you how it would have worked. That Roaring Kitty come out, 210 million. Everybody see that and they say, weird, all right, let me go buy some shares. Let me go do some call options. And you would have made money in the moment. Is it something you want to know? No. Is it something you want to do for the long term? No. Because GameStop's business model, and if you look at fundamental analysis with it, the business is not that strong. It's not. I'm not gonna lie. It's not that strong. There's nothing really there for a long-term investor, but from a short-term, things like these, you make a quick money. And the kind of money I'm talking about, you have people that make hundreds of thousands of US dollars on these trades. They see Roaring Kitty come out, they do a call option, make an easy 50 pack US for the day, because call options, you make a lot of money in a very short time. So that happened. People come out, they make the money. But the main thing here is that you have to be cautious as an investor. Some of you guys may know about GameStop. Some of you may have done a trade. Some of you may even be looking on it now and say, oh, Keisha the teacher, does it make sense? Me personally, I'm not a slam bam, thank you, ma'am, kind of girl. Not that. I'm a long, hold them forever and ever kind of girl. I'm a, till death do us part kind of girl. I'm a long-term investor. And so these short-term meme trades, I don't really do them. I don't really do them because that's not how I am as an investor. I like buying things of quality and just hold them for a very long time. I've found that you can't really go wrong with that. If you do your research, find a company that makes sense, you know that it's strong, You buy it at a good price, and you just hold it, you are gonna make money. It's boring, but it work. That's what I do. Some people may say, well, Keisha, me like the exciting, me like the short-term money. That's my thing. Go and go do it. Nothing wrong with it either. It's just not my jam. But it may be your jam. So you do it, and that's fine. But understand the risk. Don't feel like it's something where you can just make money quick, all the time, repeatedly. It's very risky. Most people go broke doing it, and you're not gonna see it because they're not come on social media and say, hey, this never really worked out. They're not saying that. What you see are the people who say, yay, woo, make some money, and then they want to make it rain or whatever. That's what you see. And then you may jump in and think, all right, let me go try it. No. Most times when they celebrate and the money don't make already. And you come in and you find that you're late. So we don't want that. If you're going for short-term trades, it's something you're gonna have to learn how to do. It's something that it take a lot of time. Okay, sit down and watch charts, sit down, glue yourself to a screen and do the trades. Some people sit down and them toilet because them can't move to do the trades. If that's for you, that's for you. Me not. I just find great companies with great business model. They're big companies, but just buy them and just hold them. That's my thing. But it's short-term thing. You go with it. But that was GameStop. Price still there, but I don't think it's gonna go up forever. The trade more than likely don't know it gone. So if you next time if you see Roaring Kitty come out, just remember me say that means you jump in, you do your trade, you exit. For those who like that kind of excitement, that's what you'd be doing there. If you feel, that's how you do it. Yeah. So next topic I thought, let's talk about it. Let's bring it back here. Jamaica tourism numbers are out. And I was like, whoa, tourist arrivals are gone. Jamaica is becoming the destination of choice. Wow, that is great. So, according to this article, what came out was that there are 2 million tourists so far this year that came to Jamaica. 2 million with an M. That's a really big number. And that's a 5% increase over the same period last year. So 5% more tourists have come, but overall, it's 2 million tourists. That's a lot of people. Now, when you think about it, right? Inflation high, so ticket price high to fly come here, right? Interest rates are also high. So if you're using your credit card to book the ticket and you can't pay back the card, you're gonna get hit. But still, despite it all, people still are jump on a plane and them still are come Jamaica. So they're paying more for the flight. They're paying more interest in credit card debt. So, a wise person may say, hey, let me kind of cut back on traveling because me not have it. Time's hard, things expensive, let me not travel. And then on top of that, if the person say, well, I want to travel, I don't mind I run up my credit card. They chose to come to Jamaica, 2 million of them. That is great. And who is benefiting a lot from it are, guess, the Airbnbs. Because based on the research, I did some research in Jamaica, how many people out of this 2 million have gone to hotels versus Airbnbs? Guess what? 31%. 31% of visitors stay in Airbnbs. So the 2 million people will come. 31%, 600,000 of them stayed in Airbnbs. Look at that. So definitely I know the Airbnb hosts, you're baiting because that's a very lucrative industry right now in terms of real estate. A lot more people are opting for Airbnb. So when you put it all together, it look like, okay, the flight expensive, but me save the money on my stay. spend the money on the flight. But all right, if I can find, a reasonable place to stay, that's how I kind of balance it out. And then, I still can do my tours, still go around town, but I kind of save money back on the state. And it worked out. So how we make money off of this? Well, the Airbnb hosts, kill it because 31% of the tourists are staying with you. That's great. But we want to think now with stocks, for those people who own Jamaican stocks, how you make money? Well, you may want to think then, which companies are connected to the hospitality sector? What companies are that? Because when the tourists come, they have to eat, they have to entertain themselves, so they're going places. They're gonna do different attractions. What are some of these companies that are tied to the tourism industry? Because they are also bidding, they're also doing very well. Some people here, money people may say, I may have shares in a Dolphin Club, may have shares in an Express Catering. Big up yourself, because the theory of it supposed to be those companies should be doing better than if more tourists are coming. We'll have to wait and see what the results look like and see if, did it really materialize? Then we can see from there. But things looking good. Tourism-wise in Jamaica looking very, very good. Another thing, REITs, real estate investment trusts. So what REITs do, the managers of REITs buy different types of real estate. They may do commercial buildings, they may do residential buildings. So they too are benefiting from this spike in tourist arrivals. They might benefit too. So a lot of people DM me all the time. I talk about real estate. A lot of persons inside Profit Jumpstart Academy, we talk about real estate all the time. It's a very good investment strategy. Very, very good. Lucrative. Cash cow. You get a lot of money from income with real estate, right? So don't miss out on it. That's why I'd say, because it's there. The data is there. I now hide and talk. I'm reading from newspapers. I read the data that is out there. And the data is saying more people are coming to Jamaica, more people are staying at Airbnb. So I can put two and two together from that and say, all right, all the money side work, all the money make. What should I be thinking about? Right? And a big part of Money Classroom is about teaching you guys how to think. So it's not, you sit down and you just watch the world pass you. Things happening right in front of your eye, and you don't really see it. I am opening up your eyes, like Matrix with Neo, red pill, blue pill. May I open it up and say, look here, see things differently. See it differently. Look for opportunities. Don't just sit down and same old, broke, nothing. I want to train you to use your eyes, your spidey eyes, and see what is happening out there so you can make money from when different things happening in the economy. That's what we want to do. So we'll put everything together now, right? How we make money? What are different types of investments that make sense right now? And for me, 2024 is a very different year. It's different. Money people are different because you can't just think about one income stream. You can't think about one investment. You can't think about having one stock, one real estate, and put your hopes and dreams on one thing. That don't work no more. It's about diversification, having a little bit of everything, because we are in uncertain times. We don't know which card to play. So you need many cards. Can't have one card and then your one card to play, ain't a problem. That not gonna work. So Victoria, I have a question. She's asking about Airbnbs. Would you encourage owners to open their primary residence to be Airbnb? Yeah, I think Victoria, here's the thing though, right? Your primary residence, where you lay your head at night. If you have space for it, yeah, it's a good strategy to make money offer your primary residence. It's a good strategy if you have space. I've seen, in some country, people are rent out them couch on Airbnb, like you lock up in your bedroom and somebody's staying on your couch and paying you 50 or 60 US a night to sleep on your couch. Some people do it and them okay, because them make their money. They're earning passive income, as we call it. But some people say, nah, not a backside. No, no, no. Me kind of my bedroom and somebody outside, a stranger asleep in the chair out there. Me not care how much money me I make. Me not do it. So, right. Georgia saying it's called couch surfing. That's the name. Couch surfing. Me not do it. That's not my jam. No. But if I have a defined space, or Airbnb or for a rental where you're not bothering me, I can't see you, we can't smell you, be good. Yes, I would absolutely do it because it's a way to make more money. But if something that, up in my face, the couch surfing thing, no, no. But maybe, if you have an additional room, could work. Some people have separate entrance to a different part of the house. That can work too. But right there in my face, no. Negative. But I always encourage people, you have to be creative about how you're going to make money, right? Everything is not by the book. Everything is not, theoretical. And I have to go buy an extra property to be a landlord. No, sometimes the answer is right there in front of you, but do what you're comfortable with, right? Stay in a lane, right? We're not going to sacrifice anything and be uncomfortable to say, oh, we'll make passive income and we're an investor, but you can't sleep at nighttime. We don't want to do that, right? Victoria saying, great, I read an article that spoke to homeowners not seeing that their property residence are income property, but instead as a liability. Yeah, so your primary residence can make you money, but the overarching thing, do what you're comfortable with. You need an investment strategy. For me, I like boring. I like boring. It's gonna be too much drama if the person is in my face. I don't want it, right? But if I have an extra space where you're out of it, I'll do it. My investments that I do, they're boring, but they work. I can't take the volatility, the up and down. I can't do the meme stock thing and to them are up 2,000%. I go sleep and I wake up the next day and it down 500%. Too much. My poor heart can't manage that. It can't. So I don't do that. But yes, Victoria, great point. You have to look at your real estate that you own, your primary residence, the house where you're living in. Look at it as a way that you could make additional income. Times are hard, interest rates are at highs. We start with that. We are right the high, interest rate high, inflation high. We have to take way and make fashion. We have to come up with creative ways to make money. And definitely one of them is looking at your primary residence more. So if Victoria, she catch it. She catch it because she come on and she say, wait there. Keisha is saying more tourists are coming to Jamaica. Keisha is saying 31% of those tourists are in Airbnb. Wait there. Have a little extra room. Wonder if we can rent it out on Airbnb and make some money, right? Legal ways to make more money. That's connecting the dots. That's what I want. More of that for you to open your eyes and see investment opportunities that are out there. Because it's not hard to make money. It's just we have to do it. We just have to just spend a little extra time and think it through. Right? Now, other things we're keeping at Jamaica. Orville is asking about proven investment. Which one, Orville? I'm not really sure. Which one you're talking about? Which one? We'll see. But with high interest rates in Jamaica, with high inflation in Jamaica, with also the fact that the Bank of Jamaica is not dropping interest rates this year, that's what they said, it not drop, they're not cutting anything. So with that, bonds get very popular, right? I see articles. I can bring up the article I saw in Observer talking about, bonds and putting it up there as an attractive investment. So with bonds, they say, seize the moment, capitalize on higher interest rates now. And I know you guys see this everywhere around town. Invest in Jamaica, profit with purpose, and Maidberry Jamaican equities bonds. Bonds are keep, right? And bonds are key basically because where interest rates are, you're getting with this bond here up to 10.5%. You're getting a rate of return bigger than inflation. That is great, right? Not endorsing any investment. Let me be clear on that. Let me be clear. Not endorsing a particular investment. I'm just saying though that because bonds are cheap, it makes sense because interest rates are high. They're higher than inflation. Your rate of return needs to beat inflation if you plan to build wealth. So bonds make sense. Which bond? That's a you discussion, right? That's where the advice come in, which I'm not giving, but I can say and educate you that in a high interest rate environment with high inflation, bonds make a lot of sense. You don't have to go put the two and two together and say, all right, which bond makes sense for me? What we need to do, right? And you're gonna see a lot of bond offerings coming out because the issuers, the banks, they know, hey, this is a great investment right now. They're using the theory. So instead of you sitting, me even see that same ad on bus, the side of bus, like it there in your eye, right there, plain as day. So instead of sitting and say, all right, sit a nice out there, all right. Think about, making some moves. Think about making moves. Victoria said, love me some bonds. She loves her bonds. She loves bonds, right? Yeah, that makes sense. That makes sense this year. They definitely do. Proven stock. Orville, what about it? What about it, right? Any company, right? Proven, chosen, anything. You analyze the fundamentals of the company. I call it the great investing blueprint. You look at the fundamentals. Is the revenue growing? G, right? Is it a reputable business model? R. Is the company run with expert leaders? E. A. Is the asset base of the company strong? T. Is the company at the top of their industry? If you tick, 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 it makes sense. It's a great company. It's a company I want to hold. Remember, I love boring. So I just buy great companies and I just sit down with them. So if proven meets that criteria for your Rville, go through it. GREAT. Go through it. If it meets the criteria, yeah, makes sense. But then you have to think about, all right, how much, what price, all of that, right? And then you can see from there. Provenly hits a lot of those 1, 2, 3, 4, 5, the GREAT, they do, right? But does it make sense for you? Maybe, maybe not. But things to think about. GREAT, does it meet that criteria? Then you think about, all right, what's the future like for companies like Proven? Given high interest rates, given high inflation, is the company going to make more money? Is the revenue going to keep growing? You can ask yourself that and then see. And then you have to think, no, all right, do I have any other similar companies to Proven in my portfolio? Maybe me have some bank already and me no want a more bank. Maybe me not a bank at all. Okay, the decision is different for everybody, right? Some people have every bank. Do you need every bank? Not really. But some people do have none. So they may want to say, all right, let me get in, right? So you always start first with analyzing fundamentals. Does the company by itself make sense? And then we say, all right, yeah, it makes sense. How do I combine it with other things to create a portfolio to build wealth. That's kind of how you put them together. And from that, say, all right, how much, what price, when to sell, all of that come in there as you think about it, Orville. But it hits the criteria. I don't know if you have other banks already, but consider it overall, right? That's kind of how you'd approach it. That's how it goes. Now, outside of the bonds, okay, everybody loving the bonds now. Stocks still there. Stocks are still there. They're not gone nowhere. But there seems to be a lot more activity internationally in the US, Canada, in terms of their stock markets, right? A lot's happening there, especially now Bank of Canada cut interest rate. Look here, that stock market is going to take off, right? It's going to take off because money is becoming cheaper. That's the key. When you see interest rates falling, it means money becoming cheaper. We can borrow money and go put it in our stock market. It's called leverage. A lot of people do it. I can borrow some money and go buy a house. House price will go up. So when things become cheaper, money become cheaper, people use it, right? So it's a boring side. Well, yeah, I like boring company. I do. All right, Laverne, your question. But with all these higher interest rates, aren't they just discouraging entrepreneurship and business expansion? Yeah, you have to get creative, Laverne. Here's the thing. We have to take quick and make fashion. Right? I run a business. Yeah, it's hard with high interest rate. We can't go borrow the money with these interest rate because when we borrow money, we have to think about paying it back, coming out run away from the bank, right? So I take a loan if I'm going to use it to make more money so that I can pay back the loan. That's the principle. If I'm going to take a loan, it must be for put into the business so I can make more money so I can pay back the loan and have profit left. If I cannot do that, me not take the loan, better leave it alone because the aim of the game is to make money. Don't take no loan if you can't make money from it. It don't work. So that's the whole idea. It becomes harder to make money off of a loan when rates are high. Absolutely, it does. But it don't mean it's impossible. There are things, maybe depending on the nature of your business, where even if you borrow at a very high rate, you still make it back, right? So you have to analyze for your specific business, does it make sense for me to borrow and put it in the business to make my money? If you feel like, when I borrow, my business don't really make so much when I can pay back that loan here with this interest rate, then don't do it, right? Find another way to raise money. Ask a friend, family. We can get creative. Sell something. Get the money to put into your business. But don't make a decision that will make you worse off. Don't do nothing that will make you worse off financially. It's better you don't make the move than to make it and be worse off. That's the thing. Now, investments. Back to investments. Which investment makes sense for 2024? We talk about bonds. Now with stocks, we're talking about international stocks and say, yeah, all right, international stocks look like them are going, right? Especially with what we're seeing with Nvidia on fire. Nvidia go on, right? And we have this thing they call them the Magnificent Seven in the US. They're on fire. Tesla was in the Magnificent Seven, them drop out because Tesla has been experiencing a lot of challenges this year. So it's now the Magnificent Six, them call it. But they're happening, basically all the big tech companies. Yeah, Nvidia, your Google, Microsoft, Apple, they're in there. Those stocks, them just keep going. They keep going. Investors like myself, the boring people, we just sit down and we buy them and we just sit down and watch it go and go and go and go and money and money. That's what we do. So if that's you and you think, all right, I like the boring thing, you look for these companies when the price dip and you get in. If you're feeling I like the exotic trades, the flips, the options, that's my thing. I love meme stocks. You can do that too. That can be your jam, nothing wrong. Two tune can play. You can do it, no problem, right? Them say, well, them say like the clock can be 6 o'clock 2 times. Yeah, it can, and nothing wrong. Pick what works for you. That's really what it boils down to. Pick what works for you. So, all right, we're coming up on the hour, and I know on Instagram it's gonna cut off on the hour. So I want to make sure my Instagram folks, because we're streaming there as well. I want to make sure you guys don't get cut off. So let me up and talk. I don't want the live to end. I say, only for comments over here on Instagram too. Better to have a diverse portfolio. Yeah, Delia, yeah, for sure. Yeah, sweet elegance NCB as all of it are not doing well. All right. Daily asking about CDs. CDs are on the fixed income side. Yeah. Again, it's still on the bonds, but very short. I want to call it a bond, just very short term fixed income instrument. Yeah, it makes sense too because interest rates are high. Laverne saying Elon Musk predicting Tesla will be a $2,000 stock in 10 years. I believe so too. I mean, I don't really know about the 2,000, but I think it's gonna be much higher than it is now. I think him just kind of wheel and come again, like him just back. I said, all right, let me just take some time, revamp these cars. Something I really go right. Let me just revamp, and then may I come again. I really feel that's what he's doing. And this creates opportunity for investors. Most people are saying, yeah, Elon, an idiot. You don't know what I do. You don't know what I do. The man knows what he's doing. I think he's just wheeling back, figure out what he needs to figure out, make the car them work better, and then he might come again, and then straight price of Tesla is going to pick back up because people are going to buy the cars. They're the leader in the EV space. They are the leader. Nobody is bigger than Tesla. Right? So he's coming early on, retooling, revamping. I think it's going to pick up in the long term. I feel so too. Absolutely feel so. All right, wait, exciting news. Our conference, Build Wealth Conference. Let me talk about that before we run out of time. Build Wealth Conference, it's back. We started last year. This year we are back, bigger and better. We've rented out all of the space at the AC Hotel. We're filling it up with all the money people. At the conference, we're talking about how you maximize your wealth. We're talking this year about business and entrepreneurship because that is an important way to make money. Businesses, and I want to focus on businesses because you are the lifeline of the economy. We need you to be successful so that the economy can grow. We're also going to be talking about investing, talking about real estate. And when we talk about investing in real estate is global investing, global real estate. And we're talking about how to use AI to make money in your business, to make money with your investments. So you have to be there. We are running a very special promotion. You heard it here first. We're running a flash sale on Friday. We're sending it out on our newsletter this Friday. So if you're not on the newsletter, you are going to miss the sale. So make sure you're subscribed. ProfitJumpStarter.com/newsletter. If you want to grab in on the flash sale this Friday, that's where we're releasing it. It's not going to depend on Instagram. It's going to depend on the newsletter. So make sure you subscribe to the newsletter so you can get in on the sale and come to the Build Wealth Conference. This year, I think every year as we push the business, I become deeper and deeper. I'm more passionate about, look here, we need to create more millionaires. I need to see people making money. I need to see people maximizing them wealth. What we need for to know, where is the world right now and what resources do people need? 2024 rough. It rough. What resources do people need to build wealth? What resources do business owners need? What kind of information? What kind of help? What kind of support do they need? We'll have it on Friday in the conference. All right, those who are investing in real estate and in stocks, what kind of education, what kind of resources do those investors need? Come Saturday to find out. And then on Sunday, we're going to be having a brunch. We're going to rock out. We're going to network. We're going to meet our business partners. We're going to meet investors. So it's a nice mingle because you need they say you need a circle. You need a village. The Build Well Conference is where you come to find your village, your investor village. You can't do it alone. You can't out there trot it and you don't know what you do and you just take it as it comes by yourself. You cannot do that. You need a village. You need education to get to the next level. You also need access to resources. Those three things. You need education, you need access to resources, and you need a community, a village. Those three things are going to be at the conference. So the smart person, I'm going to say, hey, Keisha, bring up the newsletter link again because me go subscribe, come on the sale, come at the conference because I'm intentional about maximizing my wealth. That's what the smart person is saying. The regular is saying, well, great, Keisha, nice. Yeah, but I don't know. Well, to each his own. To each his own. You decide. I am just making sure that I provide the information, create opportunities for you to connect, and then create opportunities for you to access resources. That's my part. You have to do your part. That's how it goes. All right. So, guys, this is episode 1. Tell me what you think. Drop your comments once the lives are over. Drop your comments. Let me know how you feel about our new format. We went up way down and got very real, very in the weeds. Tell me, say, Keisha, boy, this too much. Or say, Keisha, this is just what me I look for. Yeah, Keisha, the teacher, keep bringing it. Let me know. Write to us. Join the newsletter. I see Victoria already saying, subscribe to the channel. Subscribe to the channel. Hit the subscribe button. We're a growing community. We can't do it without you. So hit the subscribe button. Victoria is saying, thank you for sharing your knowledge. This is a very helpful program. Thank you, Victoria. Georgia is saying, great information. Good. All right. I really just want to make sure you learn. That's my thing. I want to make sure you learn. And I want to make sure you feel that you can do it. That's all I need. Because when you feel like you can do it, you're going to do it. And when you do it, that's when you get results. So Denica saying, wealth of knowledge. Love it. Absolutely. Let me tell my IG peeps. I say over here. They must say, yeah, full joy, the distribution of info. Love it. Thank you, Richard. And then Delia saying, I love it already. Nice. All right, good. Delia saying, you know your stuff, not dibby teachings. Yes, Delia. Yes. All right, guys. So we are back in 2 weeks. We're back in 2 weeks, right? We go every other Wednesday back in 2 weeks. And we'll continue talking about the things. If you want to learn more about the money things, you come. And we just continue learning, continue growing together, continue making money together, continue building together. Right, Nicola saying, did you like it? Press the like button. Good point, Nicola. Good point. Press the like button. Yes, press it up to make sure that, the YouTube algorithms, the Instagram algorithms, they do their thing. They need the clickies. So click. All right, guys, see you in 2 weeks. Remember, knowledge is nothing without execution. Take what you learn. Maybe you need to rewatch the show after we finish. Rewatch it. Take what you learn and go and implement it. That's the key. That's how you build wealth. That's how you provide for your family. That's how you set up yourself for generational wealth. You take what you learn and you apply it to your life so that your life can be better. That's what you do. All right. See you guys in 2 weeks. Go and implement. And we'll be back in Money Classroom Season 3. Bye, guys.